Good morning, everyone. Alyssa Corum and Ken Shreve reporting to you live from our newsroom in Los Angeles. It is Wednesday, October 17th. On today's show, we are taking a look at three stocks after their earnings reports. We have Netflix, United, and Abbott Laboratories. So taking a look at the major indexes, we are down across the board. The Dow is leading the losses, down 1%, while the NASDAQ and the S&P 500 are down about 0.8% each. So even though we had a really positive session on Tuesday, this kind of goes to show that you can't just isolate one day's action as your signal maybe to get back in.
Yeah, I mean, I think it's important to remember that we are still in the very early stages of a rally attempt here. A lot of people were pounding the table yesterday on a new market uptrend with big gains for the NASDAQ. But in the end, Friday we saw an initial rally for the market, probably some short covering going on there. Another day of strong gains Tuesday, maybe a little more short covering. So what we're looking for right now is just one more day of strength, and then we might be ready to declare a confirmed uptrend. But the market is showing today it's still vulnerable. Blue chips leading the downside, mostly due to weakness in IBM and Home Depot.
So you're saying one more day of strength. So even if perhaps the major indexes aren't yet back above that 50-day line, if we see a really strong day, we could go back into a market uptrend.
I mean, bottom line, in the first few days of a rally attempt, there's going to be short covering going on in the market. Now we're just looking for really, true signs that new money is coming in from the sidelines, and we not sure that we've seen that yet. And again, just a very weak open for stocks today. The market is still in a correction until we see more signs of strength.
That's right. Definitely keeping a close watch there. And we do have Netflix shares up about 5% in heavy volume. Now, when it reported its quarterly results after the close on Tuesday, shares spiked over 14%. So it is off of the session high here today. Still a gap up, but perhaps along with the broader market conditions that we're seeing here today, as well as the earnings and revenue guidance, perhaps weighing on the shares today. Although, I mean, pretty unbelievable subscriber numbers that they turned in, as well as subscriber guidance.
Yeah, I mean, in the second quarter, Netflix disappointed with its subscriber numbers, but certainly last night they knocked the cover off the ball with very strong subscriber growth. Really just blew away expectations. So you mentioned the stock late Tuesday was up strongly, and after hours trading. It's getting pulled down a little bit with the broad market. NASDAQ under quite a bit of pressure right now, along with the Dow. But good numbers from Netflix. Stock is still far off its high. It did gap above the 50-day moving average, but near its session low after a nice gain early.
That's right. Still trading about 14% below its high, but we'll have to see how Netflix closes the session. But definitely encouraging to see it back above that 50-day line. Yeah,
I mean the recent high of 386.80 set maybe 2-3 weeks ago. That's a resistance level to watch. Netflix, it got close to that price level today, but it has backed off well off highs. But again, excellent subscriber growth. Still very strong growth opportunities in international markets. So there's still a pretty compelling growth story going on at Netflix.
That's right. Well, we are also seeing a gap up in shares for United Continental today, up about 3.8% in heavy volume. It too, though, is off of its session high, pulling back just a little bit now at an intraday low, still holding above the 50-day for now. It was the earnings guidance that was updated for United Continental. We now have a range of $8 to $8.75, whereas analysts had been looking for $8.16 for the full year earnings metric here.
Yeah, so there's a nice turnaround going on at United Continental. You and I were just talking about another quarter of accelerating revenue growth. So the company seems to be doing pretty well. It's in the kind of a middle of a 3-year turnaround program that the CEO announced earlier this year. Normally when a stock gaps above the 50-day moving average, it can be buyable. But again, United Continental's in the same situation as Netflix, a strong gap up. It's given back a lot of its intraday gains. You know, bullish price action with the gap above the 50-day line, but stock has given back a lot of those gains.
That's right, and you mentioned acceleration for both the top and bottom lines. We have earnings up 36% from 17% last quarter, and sales up 11% from 8% last quarter. So it's always nice to see that acceleration in growth.
Absolutely true, and you know, the market is in a correction, so even though there's a gap above the 50-day, we want to be very careful with new buys in this type of market.
That's right, and checking in with Abbott Laboratories after its earnings, those shares are down today about 1.8%, above average turnover here. But even though it's down after the earnings report, there's kind of a silver lining here when you're looking at the technical action.
Well, it's holding above its 50-day moving average, which a lot of stocks can't say right now. But this is a diversified healthcare company. A lot of healthcare names still holding up in this unsettled market. Abbott Labs earnings and sales mostly in line with expectations. Guidance mostly in line, but their diagnostic sales big gain there, up 42%. To 1.8 billion. So Abbott Labs, one of many healthcare names, definitely holding its own in this market, still holding support at the 50-day moving average.
That is right. Okay, everyone, be sure to head to investors.com throughout the trading day as well as after the close for all the latest market news and analysis. And the big picture of that is where you will see the update on the market conditions, whether we, if and when we move back into a confirmed uptrend. That is the first place that you'll be able to find that. All right, and you can check us out on social media as well. Thanks for watching, and we will see you right back here tomorrow.